So as the Chinese stock market pulls back and the economy slows, Chinese consumers are spending a lot less. And as Courtney Reagan reports, many luxury retailers around the globe are growing concerned, and perhaps with good reason.
Chinese consumers are responsible for nearly a third of all luxury sales around the world. And recent news from China has luxury brands concerned. China's economic growth has been slowing, and its volatile stock market is causing confidence shocks. Plus, experts say Chinese consumers are starting to divert spending to experiences, second homes, and artwork. Add in the Chinese government crackdown on corruption, which has ended lavish gift giving, and luxury companies have cause for concern.
The Chinese consumer has been a huge driver of luxury really over the past 10 years. And, I think it's come in different waves. I think we're now in this kind of second wave, and that's that very high-end Chinese consumer feels less certain about their position, and I think that's why they're traveling a little bit less and certainly spending a lot less.
Kering, parent of brands like Gucci, Balenciaga, and Alexander McQueen, calls 2015 a year of reflection in China after years of rapid expansion. Gucci sales grew just 3% in Asia Pacific compared to 20% in Western Europe. Kering's CFO said trends are not encouraging in Hong Kong and Macau, warning investors not to expect any improvement soon. De Beers earnings for the first half of the year have fallen 25%, and the diamond company warned the second half of the year will remain challenging due to slowing diamond jewelry demand in China. Prada's leather goods sales fell more than 11% in Asia Pacific in the most recent quarter, leading a number of analysts to lower earnings expectations.
Companies have indicated that they believe that there has been a little bit of a shift away from spending to more experiential goods in China. I also think just certainly with the current political environment there, the ostentatious display of wealth that I think was so endemic for a number of years in China is not really appropriate in this environment.
But there are some indications Chinese tourists are buying luxury goods outside China, in places like Europe, where the weaker euro makes high-end goods less expensive. LVMH, the world's largest luxury company, says while Louis Vuitton sales were negative in China, Macau, and Hong Kong, sales shifted to other geographies like Japan and Europe. That's a burden on luxury brands, though, that have many stores in China with high fixed costs and lower sales. Another concern is if Chinese consumer preferences have truly changed and they're buying less luxury merchandise in China, it could be a warning sign of trends to come for Chinese consumers buying less everywhere. For Nightly Business Report, I'm Courtney Reagan.